combating financial frauds with technology supported by Invest India and Startup India. My name is Sriraj Deshmukh, and I will be your host for this session. We would like to thank our session partner Refinitiv, Gold partner Reacta, Bronze partner Onfido, and Knowledge partner EY. We are now moving on to our next session on current cryptocurrency landscape and its importance of security. I would like to introduce you to the moderator of this session, Mr. Akand Sitra, Business Strategy, TRM Labs. Next, I would like to welcome the panelists, Mr. Rolf Haudenschild, Chief Compliance Officer at CoinDCX, Mr. Sam Noble, who is the CTO at Zebpay, and Mr. Vivekdeep Gupta, who is the country head India at R3. Over to you, Mr. Akand, to kickstart the session.
Thank you so much, Sriraj. Thank you for inviting all of us to this particular panel. We know that IMI is a very respected organization, and we are glad to be a part of this panel discussion. Cryptocurrency landscape itself is changing rapidly, and there's a lot going on in the industry. And I'm glad to talk to the panelists over here. Rolf is a compliance regulations law expert in the field. Sam is a tech expert. He's the CTO of Zebpay. Vivek comes from the business part of blockchain domain. So a short introduction from all three of them. Rolf, can you briefly introduce yourself, please?
Thanks a lot. Yeah, it's really a pleasure and privilege to be on this panel, sharing it with such esteemed colleagues. I'm personally coming from the legal side, as you mentioned, actually also from the traditional financial legal side. I've been working in banks and for a while also for the Swiss financial regulator, looking after traditional incumbent financial institutions. Still have quite some connections to the traditional financial space, looking and assisting on regulations, in particular in the wealth space, but have been following and increasingly involved in the blockchain crypto space from early times when people started talking about Bitcoin, to the whole ICO cycle that we went through, crypto winter, the regulations coming in on the AML, CFT, regulations, licensing for the different virtual asset service providers, and so on, and really excited to see where the journey is going on all of that. And today, excited actually to be on this panel.
Thank you so much, Rolf. Sam, a bit of introduction about yourself, please.
Absolutely. And as Rolf says, it's an honor to be here. Great to be talking with everybody. And as we were discussing before, I really can't wait for the COVID situation to resolve and we can start doing these things face to face again, where we can all sit in the room together. It's a lot more fun. So as was mentioned, I'm a technologist. I started off doing my bachelor's and master's degree in computer science, and then got into the world of software development, where in 2011, I was sitting in an office in Norway, and a bunch of guys around me were trying to tell me to install this software that would mine Bitcoins. I thought, what is this? This is just, get back to work. We got so much work to do. And then a couple of years later, it kind of grew from there. So during that time from 2011, I was also in the fintech world. In 2016, built a Forbes FinTech 50 company, leading the development. And in 2017, this new paradigm shifting software called EOS.io came out, which was then launched in June 2018. So I saw a really great opportunity here to start bringing together a lot of that fintech experience, the deep technology experience, and applying it to something as groundbreaking as blockchain, and especially when we introduce permission blockchains that have upgradable smart contracts and a kind of whole host of features that took what Bitcoin and Ethereum have done to us and took it to the next level. So having been working in that space since 2018, I then started my journey with Zebpay last year, originally as a consultant. Came in as a kind of very boring management consultant to help do some performance optimizations and processes. And after working with the team for a few months, I just absolutely fell in love with everybody who I was working with, the vision and the passion of the company. And so at the beginning of this year, I said, "Hey guys, can I come and join?" And that's where we are today. The rest is history.
That's beautiful. Vivek, a short introduction of yourself, please.
Thanks, Akand. Pleasure to be here. My name is Vivek. I lead the India and South Asia business for R3. R3, for some of you who may not know about us, it's an enterprise blockchain company. So we play in this very interesting space where we are in the blockchain space, but not really in the crypto space. And we are kind of acting as a bridge for traditional financial institutions and even corporates to actually access and figure out what they can do with blockchain from a technology, from a process improvement, or even from traditional asset management perspective. So I've been with R3 since 2018, set up the India office. Now we have a pretty decent sized team based out of Mumbai. Prior to R3, again, I think everyone in the blockchain space or most of the people find their way through fintech. So I was both a fintech entrepreneur in the Valley, did one of the earlier early wage access applications, which was based on providing incomes to freelancers earlier than what their normal pay cycle would. And then came back to India and was doing fintech investing, impact fintech investing through USAID. Where we funded the first check in some of the companies like Pay Nearby and others, which are pretty big names in the fintech world in India today.
Beautiful, beautiful. A short intro about myself. After graduating from IIT Madras, I joined the Government of India with the Ministry of Home Affairs under Intelligence Bureau. It's an intelligence organization. I was an assistant central intelligence officer for like 3 to 4 years, where on the dark web we used to perform these dark web monitoring, social media analysis, etc. That is where I got in touch with Bitcoin, about these cryptocurrencies, because that's how the entire technology space started in the blockchain space, because criminals tend to use the new technology first. That is where I fell in love with it. I worked there for 3-4 years. Then I thought I'll get back to the private sector. I did my MBA from the Indian School of Business. Currently, I lead the business strategy team of TRM Labs. We are a blockchain analytics company. We take care of regulations. We take care of compliance, risk management for financial institutions, crypto exchanges, law enforcement agencies, etc. It's great to be in this particular panel. I see functional diversity over here. As I already said, we have compliance, legal, we have tech, we have business, we have analytics, we have everything in this particular panel. And I'm very excited to ask questions from you guys and get your insights and perspectives. So I'll start off with Rolf, since you head the compliance and legal for one of the largest exchanges in India. First and foremost, what would be the current regulatory and law-based challenges for cryptocurrency exchanges, or VASPs, as we call, virtual asset service providers, to offer the services across the world? One easy question for you first.
One easy question that could probably take the whole of this panel discussion. So what are the challenges? I think there are more than enough challenges. One of the challenges where we have a crossover is definitely the whole AML space that you have already mentioned, with regards to criminals actually using this new technology, this new type of payment service to launder monies. You hear it all the time also with regards to ransom payments that are nowadays done in cryptocurrencies. But on the other hand, also thanks to companies like yours, it is actually easier to track cryptos than it is your cash bill that we use in our everyday payments when we go to the restaurant or merchant. So there are really the pros and cons of it. I feel that there is a huge opportunity for development in that space to actually make it harder for criminals than the existing financial system. But that is only one of the challenges that we are confronted with. Another one, and I'm sure Sam will be able to contribute more on that, is the whole technology security space. We all know that there is hacking. It's not necessarily the hacking of the blockchain itself, but you have all the exposures with regards to flaws in the smart contracts, but even more crypto exchanges like ourselves, custodians that get hacked, the cryptos get taken, hijacked. That is definitely one of the challenges. But then, and that's also where the whole global ecosystem comes into play, is the licensing space. Financial services are regulated. In every country, financial services are regulated. In every country, slightly different. So in a number of countries, crypto services are currently not regulated, or only if you get into certain areas of it. There are certain commonalities around different jurisdictions. For example, where cryptos have the characteristics of your traditional securities. In most cases, they would actually be treated under the securities laws. Where it's purely for payments, it is a more diverse landscape from a regulatory point of view. But as I mentioned, you have those regulations in every single country. And currently, every single country, every jurisdiction has its own laws and regulations. But like the internet, crypto, digital payment tokens, it's open globally. You can access it. I sit in Singapore, I can trade in India. From India, you can store your tokens in the UK, in the US. You can do a trade in South America, whatever. It's all open, but from a regulatory point of view, it means you actually need to think about all those regulations that you could get in touch with. And currently, that is a nightmare, to put it mildly. But not only for the crypto space, it is a nightmare for the financial industry by itself. I think just more pronounced in our sector, because it's even easier to be active across borders. Borders essentially don't exist in the crypto space. So it's more prevalent for us, it's more hindering to us than for a traditional service where you go to a bank branch, to the teller, and interact there locally.
Extremely well put, Rolf. To continue on one of your points, Sam, from a technical perspective, from a technological perspective, what could be the security challenges for the crypto industry going forward?
Yeah, it's a great question, and it's a huge landscape. I think the title of this this talk is the current cryptocurrency landscape and the importance of security. There is a security landscape within this cryptocurrency landscape as well. And not only do we have the traditional challenges that anybody else with public-facing infrastructure suffers from. So any of your e-commerce or your social media sites, they have the same issues. We now have this new component called blockchain. And this blockchain is new. In technology terms, we're touching 10, 11 years old, which is still very young for technology, and a technology that is carrying so much value with it. So the higher the value in any of these things, the more attractive it is, and the more people will invest in trying to find ways to subvert and work around. So we have the traditional challenges that anybody will face in trying to get access to your APIs, trying to steal user accounts. We have the user data that we have to store as well, because obviously when users are signing up for an exchange, they're giving over sensitive information because we're following AML and KYC processes. So we have where users are trusting us with that data in order to validate themselves. And then we have the financial assets as well, the digital assets that they're storing within the exchange to add to an additional layer of that. So we have a lot of kind of high value information or high value data, and we have a lot of entry points that people try to use to gain access to that.
Yeah, that makes sense. Vivek, since you're on the business side, let me ask you some questions from the human psyche perspective. Like, what would it take for the common man to become more comfortable with, indulging themselves with cryptocurrencies? It could be investing, it could be hodling, it could be, using for a variety of payment purposes, etc. But what would it take for them?
So that's actually a very, very good question, Akand. And we at R3 kind of spend a lot of time thinking around this and hopefully trying to build infrastructure that makes that possible. So I think when you talk of the common man, I think it's important to understand we're talking of just the average person, not the person who is, very computer savvy or even so. The way I think about it, how would a early e-commerce user try and get into crypto? At the moment we make our infrastructure and our technology suitable for that, the sooner we'll see the adoption growing from whatever lakhs and thousands that we have today to crores. And for these type of common users to actually join this movement or this ecosystem, I think 3 or 4 things in my mind are key. First, I think one which is key is regulatory clarity. Right. And this has been a very talked about topic in India. Cryptocurrency still, in spite of the good work done by IMAI and others, is still in a gray area out there. Remember, most people do not have the appetite to deal with laws, complex taxation, and all of that on a day-to-day basis. They want something where things are predictable, right? And only way you can get to that is by introducing regulatory clarity. And should regulatory clarity be what the industry wants, or versus maybe treating crypto as an asset, not as a payment medium and stuff like that? Whatever it is, that clarity needs to come in. The second thing I think which would drive adoption is more increased institutional participation. This is a global trend as well. And I think for all of crypto's talk about growing trustless, people still want to see trusted institutions in place of where they park their money, right? So what we need to see is institutions, the big banks where you keep your savings, your asset managers, your financial advisors, talking about crypto in a responsible, regulatorily compliant manner, right? And that has multiple aspects, in my opinion. There is, of course, the policy bit of it and business bit of it, but there's also the technology infrastructure. How do you make it easy for institutions to overcome their internal barriers to get into this space? The third thing, which Sam very rightly pointed out, is around security. Rolf made an interesting point that there have been hacks. The blockchain has probably never been hacked. The core Bitcoin blockchain probably has never been hacked. But for a common man, it doesn't really matter, right? He doesn't care whether your blockchain has been hacked or your wallet has been hacked or your exchange has been hacked. What he reads is the fact that the money was there, today it's not there, right? So we need to have security. We need to, probably find a happy medium between not my keys, not my crypto, and the complete custody model. And that's what will come through a mixture of policy from the exchanges, from the regulators, a bit of technology, and all of that involved. The last and final factor in my mind is, I think if you're looking at crypto as an asset class specifically, it would be about lower volatility. I think people, especially with their hard-earned money, want some sort of predictability. Even if it's not like a fixed deposit giving me 8% year on year, at least they want to know that my overnight, my portfolio value is not going down by 50%, right? And lower volatility is something that will happen as a natural course of time as the crypto market expands. But I think also it ties back to more institutional participation and participation of more sophisticated actors, because the more such sophisticated actors get in, the more sophisticated instruments they will bring in, hedging instruments, futures, options, and all of those type of things, which will go towards lowering the volatility in the market. So I think if you take care of these 4 things, starting with regulation, institutional participation, security, and sort of deepening the market and lowering volatility, over the course of time, it won't happen overnight, but over the course of 3-4 years, I think you would see our parents kind of getting comfortable with putting a part of their savings in Bitcoin or any other cryptocurrency.
Some extremely interesting viewpoints there, Vivek. I'll take the first point, regulations perspective, and go to Rolf directly there. Rolf, you had experience in the fintech domain, in the finance domain for so long, and experience in the crypto domain. So my question to you from a regulatory perspective is, are there different rules for these separate domains? Are there separate rules for finance to be followed, separate rules for crypto industry to be followed? How do you see it from a legal perspective?
So unfortunately, at this stage, we still see different sets of rules. And that is essentially because crypto hasn't been around long enough. Regulation always takes actually a long time to get implemented, and it only gets implemented in hindsight after problems have occurred. So when, for example, early securities laws were implemented, that was actually in the US in the 1930s. It's not like thousands of years ago, it's 100 years ago. Nobody thought of blockchain. Accordingly, there were no rules made for blockchain for cryptocurrencies. And this is also something that regulators struggled with heavily by now, I guess it's like 3-5 years ago, with how do you qualify a Bitcoin? How do you qualify an Ether, whatever the token is? Is it a security? Is it a commodity? Is it cash? What is it? And accordingly, which regulations do we apply to it? Unfortunately, we still haven't reached the final point there, for good or bad, maybe. So there is, as I mentioned, certain consent that if a token has the characteristics of a security, and you will also find a number of services, projects nowadays that want to tokenize existing securities. And that's where definitely securities laws will apply. And then you have essentially the same level between traditional finance and the tokenized type of it. But other types of tokens, when you look at utilities tokens, pure payment tokens, it is not uniformly regulated yet. And in certain countries, it is not regulated at all. And that actually means that if you go into market abuse, there is no criminal offense to it. The securities markets, you have everything around insider trading, market manipulation, what your disclosure transparency rules are for trading, for holding certain above a certain thresholds of that company or whatever it is. Essentially, in the token space, we don't have that. We don't have that yet because the respective regulations have not yet been made. But in my view, there is a clear trend to actually bringing in a lot of the traditional regulations in that space. And I actually find it also a necessity to bring it in, because all those regulations in the securities markets were developed to protect investors, also to protect small-time investors like ourselves, and not just the institutions. And if we want to bring everybody in to democratize finance through crypto, through the blockchain, then we also need to protect the lesser sophisticated investor. We need to offer that opportunity to them, and regulational clarity, as Vivekdeep has mentioned, provides an important part into all of that. So it's not there yet, but it is going in a direction of increasing regulation and towards parity with traditional financial regulation. But there will always be differences because of the regulation. which we should actually try to utilize for the benefit of everybody, not just of the industry, but actually of the users themselves as well, to make it better accessible for everybody.
Absolutely. I see regulations evolving, obviously, because there are organizations such as intergovernmental organizations as the FATF, the Financial Action Task Force, which is coming up with these regulations, with the FinCEN, with the MAS, Monetary Authority of Singapore itself from your jurisdiction, bring some beautiful regulations which other countries are trying to deploy. And yes, we see the evolution of regulations itself will take a couple of years, 3-4 years. But yes, that is completely necessary, at least from a security point of view. Coming to the security point of view, Sam, you lead one of the largest exchanges in Southeast Asia. How does the attack surface look like? As in, if I'm a hacker, if I want to steal some funds from your particular company, how would I do that, and how are you stopping it?
I'm not going to tell you that. Yeah. So as I mentioned before, the attack surface is huge. So if you can imagine, we're running a lot of public infrastructure where users are interacting with our APIs at the kind of very basic level. So you'll have a mobile application or a web application, and these are traditional security challenges that any kind of online platform will have. So as with any approach to security, it's a multi-layered approach that we have to take. So at each point of ingress or at each point of attack, that's where you have to have a whole bunch of layers in. So ultimately, a lot of it comes down to how we're protecting the data that sits inside, rather than how are you securing the perimeter, how are you protecting the data? Because ultimately, it's a game of cat and mouse or cops and robbers. You're trying to prevent somebody, or you're making it difficult enough for somebody to get inside undetected, that they're not going to get in without tripping off some alarms. And as they're trying to get in and tripping off alarms, you're able to see what they're doing and shut them down and prevent them. This is why we have multiple layers at each point. So a big part of how we're protecting users is just by using a lot of technology. So we have a lot of process in place, which makes sure that we're doing things in a secure way, that we're doing things in a correct way, that we're following the guidelines and industry best practice. And then when you get down to the core of it, just utilizing as much technology as we can to keep user data as safe as possible. So using encryption, which is a fundamental part of blockchain and cryptocurrency in itself, using encryption to make sure that even if somebody was able to get hold of user data, they can't do anything with it because it's encrypted. And also in the way that we're storing users' funds. So this is an interesting point, what Vivek mentioned before about, not my keys, not my crypto. And I think this has been a constant back and forth and discussion within the crypto community, that yes, it's not my keys, not my crypto, but also it's kind of hard to keep your keys safe and to look after them. So in some elements, it's easier to hand that responsibility over to somebody else and say, hey, look, you guys seem to know what you're doing, you look after this. Because if you have a lot of money and it's in cash sitting in your cupboard, it's pretty risky. Somebody can break into your house, or there'd be a fire and burns all of your cash. So you put it in the bank. You put it in the bank for a reason, because you assume they're going to look after it better than you can. They have better controls in place. They're able to do a much better job of protecting it, and they have insurances and all of these things. So there's a lot of, depending on which area of the kind of the exchange you're looking at, there's a myriad attack vectors. The surface area is absolutely huge, but luckily we have a very big tool chest or war chest of techniques and technology that we can use to keep people out. And if they do manage to find their way in, we're alerted of that very quickly, and then we're able to take preventative measures. And then if they get all the way in, we've taken so many kind of lengths and gone to such extremes to keep everything secure that should they get inside, they probably can't find much anyway. So it's just this huge kind of the onion effect, multi-layered all the way down.
That makes a lot of sense. We'll shift gears a bit. We talked about cryptocurrencies, blockchain. Vivek, you're in R3, your organization is in the enterprise blockchain. So enterprise blockchains are a bit different from regular cryptocurrencies blockchain. So What are you doing in this space to enable this kind of transformation? If you can just throw some light on that.
Sorry, I guess you guys can hear me now. Yeah. I think that's an interesting journey for R3 as well, over the last few years. When we started, it was enterprises were totally crypto averse. They loved blockchain technology, and that's where our genesis of, the banks who invested in R3. They were like, we love the technology. We don't want to deal with crypto. Can the technology help us solve our business problems? So for a better part of time, we had a lot of success actually using blockchain as a core technology to solve, let's say, problems in trade finance, problems in settlements for traditional exchanges and the likes, right? But gradually over time, what has also started happening is institutions themselves have gotten more comfortable with crypto. It's because of demand. You could attribute it to price action. You could attribute it to, I think I read somewhere 30 million people or something like that in America hold crypto or something like that, just increasing adoption, price of Dogecoin increasing, whatever, right? There are multiple reasons, but institutions have gotten more and more comfortable with crypto. Now they are coming to us, and most of the conversations these days that we see are along three streams. One is, of course, the old traditional conversations, use blockchain to solve a business problem for me, right? Which is, okay, you have a problem in trade finance, you have a problem in settlements, I'll go and solve that for you using blockchain as a technology and our platform as a technology. The second thing is, we know that R3 and Corda is in itself a mature, regulated blockchain platform, right? So can you help me be a bridge to this, unknown, exciting, but scary world of crypto? Right. This is where we see a lot of exchanges coming in and saying we want to create traditional exchanges, right? Not upstarts, traditional exchanges who come in and say, I think my country, a lot of citizens are looking for access to digital assets or cryptocurrencies, right? Can I set up a regulated infrastructure to do that? So for example, in Switzerland, we have been working with the Swiss National Exchange, SIX. They are actually setting up an entire digital exchange powered by our technology, which is going to act as the bridge for normal Swiss citizens to actually get access to digital assets. Now, digital assets could be cryptocurrency. Digital assets could also be more exotic stuff like NFT and other things that are becoming popular. Could be wine, could be something else as well. The third line of conversation that we see with a lot of these clients is, can you, banks and especially think tanks within banks are realizing that crypto or tokenization by itself has advantages, right? It lowers settlement times, lowers transaction costs, gives you direct ownership, atomic swap of value, and all of those type of things. So they are coming to us and saying, can you make traditional assets more crypto-like or token-like? This whole wave of tokenization that we are seeing across the industry. Can I have my equity as a token, right? Traditional Apple shares or HDFC Bank shares that I'm holding, can I have that as a token and go for, instantaneous settlement? Or is it possible for me to organically buy 0.001 of an HDFC share rather than buying 10 shares or one share at the bare minimum, right? So the conversations have changed over the course of this year. And as I was telling my colleagues, the good part of working in this industry is every year there is something new. So this year, and the latest trend that's picking up and banks are looking at it seriously is, can you help me bridge this world to crypto? And then can you bring the advantages of crypto and tokenization to the traditional assets that I offer my clients?
That makes sense. That makes sense. Coming to Rolf, in a traditional bank, in a traditional financial institution, when I need to register my account or something, I would go through a KYC, know your customer kind of documentation. I would need to provide my identity proofs, such as the passport in India, the Aadhaar card, the residence proofs, etc., to ensure customer due diligence. Are there similar customer due diligence activities being done on cryptocurrency exchanges to know who exactly is transacting And do you use some kind of technology over there to ensure that no illicit transaction happens on your exchange?
Yeah, I think what you just mentioned is actually the difference between the traditional finance and crypto finance, as in we use technology for it. Both types of finance are identifying the customer. There is the requirement in many countries, most countries by now, FATF is also requiring that you must identify your customer. It's essentially the same information you need or we need to obtain that any traditional bank needs to obtain of a customer. What we just do differently is that we try to do this digitally. We do this actually exclusively digitally. So Aadhaar can be a great use case for that. Singapore also offers digital ID. Other countries don't offer digital ID yet. That's where you then use other types of tools that read scanned pictures of the documents, that do facial ID as well, so that you can identify your customer correctly. You collect that information, and then it's essentially the same requirements and also the same things are being done as in traditional finance. You do check the different transactions of your customer, which ones are potentially nefarious money laundering transactions, which ones are your perfectly legitimate transactions. In that regard, as I already mentioned, blockchain actually offers additional opportunities for us that traditional finance doesn't offer us, because blockchain is public. You can look into all the transactions. I can look in all the transactions that have actually ever taken place on the Bitcoin blockchain. So if you give me a banknote, I will not know what has happened with that before. So blockchain really offers us additional layers, additional opportunities to analyze transactions, to analyze individual accounts. But what we are seeing as a huge challenge there as well is actually how you can create accounts, how you create your wallet. Because I, as an individual, can set up my wallet. Versus with a bank, with a traditional account, I want a bank account, I must go to a bank to actually open an account. The bank will know my identity, but if I create my own wallet, nobody knows who the owner is. Only I know it. So there is the difference between the crypto exchanges like ourselves, where we know who our customers are. We do identify them. We can tell when tokens are coming in or going out, which customer are they associated with. But if you go to a individual wallet, it's essentially the same as me giving you that banknote, you putting it into your physical wallet and walking off. Crypto offers, or blockchain offers me better ways to track it, where those tokens go, what those transactions are. But it is still a huge challenge, not to say an unresolved problem at this point in time, of how can we really identify definitely those users, those wallet holders, and make sure that it is a legitimate transaction there, that it is not a criminal's wallet. So that is a real challenge, and FATF has been looking most of all at the inter-service provider level, requiring the exchanges, the VSAPs, to transfer data on the transactions between them. But it still leaves that area, that interaction with the individuals open. But there, I also like to use actually the analogy to the traditional financial services. We do not expect in the traditional financial services that every transaction is actually somehow monitored. If I go to a grocery store and buy my can of Coke, nobody knows that I bought what I bought with it, how much I paid, and so on and so forth. Nobody actually cares about it. So why do we have the ambition to track every single transaction in the crypto space? Is that really necessary? Or should we allow ourselves to take similar risks in the crypto space and actually facilitate the use of this technology, make it really accessible, make it broadly useful in regular payments as well?
That's a very radical point that you made over there, Rolf. One more point you made was blockchain cryptocurrencies are an open, decentralized ledger. That is, everybody has access to all the transactions. One data point that I saw was when you normalize the volumes as a percentage level, the illicit transactions on crypto are far, far lesser than illicit transactions in the fiat currencies such as the USD or INR. So yeah, that's a testament to your point over there. So you talked about using technology in regulations. Sam, let's go to you to use regulations in technology. So how do you think crypto exchanges or vast virtual asset service providers should be regulated or audited from a tech perspective, from a technological perspective?
Yeah, this is a huge area, and I guess one that's been under hot debate for a while now, especially here in India. Personally, I think it should be regulated as any other kind of financial institution. We're, as an exchange, we're providing a service, and we are looking after something of value to a user, and that has to be regulated in a professional and well-established manner. So, in order to make sure that whoever is holding those funds are securing them in the correct manner, not using them for illicit purposes themselves, which I think, as Rolf mentioned, if we look at what goes on in the world of fiat, there's a lot of kind of very strange and weird and wonderful things that go on there, even in a heavily regulated environment, because of that lack of traceability. So here we have some traceability. We can kind of see what's going on to an extent, but we should treat it in the same way, because ultimately it's coming down to the same thing. We are looking after something of high value. We're looking after money. We're looking after data, and therefore we need to have similar levels of compliance around that. In terms of the storage and the way that we're securing users and their values, in terms of the regulation around how money is coming into the exchange and how money is coming out of the exchange, that's another kind of really interesting area as well, because I believe that as an exchange, it's our responsibility to ensure that we are not allowing funds from a kind of I'm not sure of the correct term, but unscrupulous backgrounds or unsavory sources. So money that's coming from darknet markets or wallets that are associated with terrorism. We have a duty to make sure that we are not complicit in money laundering or any other activity. So that's another kind of separate part of the regulation where we have to be responsible, as not quite in the full form of like PCI DSS and around payments infrastructure, but in terms of making sure that we are protecting the interests of our users, and we ourselves are not doing anything that could be seen to be illegal. So in order to make sure that that is done in a normalized manner across the world, so that each exchange is kind of following the same rule set, we need a set of compliance and regulation around that to keep everybody on the same page. Now, that I would say only kind of really applies to the centralized exchange model, where we're doing with fiat on and off ramps. You then have the decentralized exchanges, which that's a whole different kind of set of rules. There, I think it's very, very difficult to have any form of regulation in, which I think is okay because it's decentralized. There is no one central party who's to be regulated. So I think all of this absolutely on the centralized exchange model. There's definitely a lot of things we need to do, and I think it's coming. Some of the European countries, I work with a lot of people in Europe who deal a lot with crypto. Having been a block producer on the EOS network for many years, a lot of people are getting paid in crypto. And there we're starting to see a lot of kind of regulations around compliance and taxation. And it's starting to evolve. But again, it's still in the very early days yet.
That makes sense. One last question to Vivek. We've seen the blockchain, disrupting the financial industry as crypto exchanges are here. We've seen about Sam talked about decentralized exchanges. We see they coming to banking, financial industry, etc. As a company which is an enterprise blockchain, what other sectors do you think that blockchain could disrupt in the near future? If not now, 5 years, 10 years, 15, 20 years down the line?
That's a very interesting question. I wish I had a crystal ball to give you the exact answers, but I think payments potentially could be one area that could be disrupted. And that's where we see, the payment network operators also looking at blockchain. Of course, the famous one is Visa's investment in Circle and USDC, and which is about to go public and all of those. So that's one. Global trade is something that we have been talking about, tokenization of, just trade data, trade invoices. And lastly, I think the biggest thing in my mind is, we talk about blockchain competing with fiat, but with CBDCs, blockchains could disrupt fiat as well. Could there be a world where, 5 years from now, there are no banknotes and there are only CBDCs? It's not unimaginable with the way the central banks are going at it. So yeah, those would be my top 3 predictions, looking forward. But I think the most one that would be exciting would be just blockchain, which is now or cryptos, which are now competing with fiat, actually co-opting fiat and making fiat cryptos through CBDCs.
That's an amazing prediction. I hope that becomes true. So we have a couple of more minutes. So I understand that the security landscape that we spoke about on the crypto space is still evolving in the country, in this region, in the entire world itself, and all governments are working hard towards bringing regulations, laws to regulate the entire industry, so that all of us can grow safely together. All of us want to ensure that no illicit transactions come into the crypto domain. We don't want any illegal activities such as money laundering, terrorist financing, hacks, or scams to happen in this industry. And with industry leaders such as yourselves, stalwarts such as yourselves, I'm pretty sure that in the very near future, crypto industry is going to go completely mainstream. It already is mainstream. But with more and more clarity in regulations, as Sam, Rolf, and Vivek was speaking about, I am pretty sure that at least the IMAI would do its best to perform, to at least influence or at least give some kind of advice to the governments across the states and the country and perhaps the world. So yes, I thank all of you speakers for coming here to talk about your perspectives, insights. It's been a completely enlightening talk for me, and I'm sure for the users as well. Yes, we ran out of time. We could have spoken for at least a couple of hours more, but we just have a 50-minute panel schedule, which which is there. I'm giving back the baton to the host, Sriraj.
Yep. So thank you very much for such an engaging discussion. Thank you, all of you. A special thanks to our panelists and our moderator for being here with us today and making this possible. And another thank you goes out to all the attendees who are here with us today. Thank you so much, everyone, and we'll be back in a while with the next session. Please stay tuned.
Thank you.
Awesome.
Bye.
Thanks, everybody.
Thank you.
Thank you, everyone. Bye.